We've done different countries, we've done Japan, we've done India, now let's do China.
Great.
Just coming back, what did you learn?
You know, I'd say on the positive, the economy is bottoming. We heard a couple of different data points, I think, from companies in the logistics business that are seeing the U.S. consumer pick up a bit. So that was a positive. And I do think things have bottomed also in Europe, and there's a little bit more demand. But overall, it's still a pretty sluggish economy post-COVID with very low inflation.
And the growth that is there is not evenly distributed. There are some areas growing much more than others, as I understand it.
Yeah, we've spent a lot of time. I've actually been to China 4 times in the last 5 quarters. So I'll give you how I think the evolution of the economy is changing. Really, a lot of people focus on fixed investment. They focus on exports. I think the Chinese government is really repositioning the economy towards a couple of different things. One is this whole idea of digitalization, particularly as it relates to the industrial sector. They're trying to automate that sector to be more effective and more competitive globally. In the past, I think a lot of people thought about China in terms of e-commerce, Alibaba, domestic consumption. The focus right now from the government really is on industrial automation. China today actually has about half the world's robots on the industrial side, which is an amazing statistic. The second big driver is around the green effort, and they're trying to really dominate batteries, EVs and solar panels and that, and they're trying to export some of that globally. So those are really the growth drivers. The offset, which is still problematic, is around housing. And our estimate is they have somewhere between kind of 20 and 30 million too many homes. And so they're trying to clean that out right now. But that's a disinflationary force, and it clearly has an impact on domestic psychology as well.
Some of what China is investing in the green transition has gotten the attention of places like the United States and Europe, whether it's solar panels or batteries or EVs, because there's a concern of a build of overcapacity.
Yeah.
Do you see overcapacity, and what does that do to margins?
I think what's going to happen around the world right now is that industries such as autos are going to become of national interest. We've already seen that in technology, could expand into other sectors. So there's definitely going to be sensitivity. You saw President Biden talked about increasing the tariffs there. Europe, I think, is going to do a similar type of strategy. So you can have capacity. The question is where can that capacity go? I think probably if you're China, you'll see more of it go into places such as Latin America, other places, maybe Eastern Europe, where they have partners that maybe there's increasing kind of bilateral trade. That doesn't seem to be the case in the U.S. and Europe right now.
So there is growth. You found growth there. As you said, it's bottomed out. At the same time, when you take into account the disinflation, the nominal GDP actually is not growing at the same rate as at some other places like Europe and the United States.
If I could give an insight to your viewers, I mean, KKR typically has 150 businesses around the world, upwards of 200 now where we operate. You got to focus on nominal revenues, nominal GDP. What does that mean? It's real GDP plus inflation. A lot of times the sell side focuses on real GDP. And what you've seen in China, when I started going there in 1995 and when I started at KKR, nominal GDP was in the teens and 20%. There's a lot of growth and a lot of profit that comes with that. Today, that number is probably about a third of that. So that inflation component has come down. And the second thing is on the real GDP, the productivity has come down in concert with slower labor force growth. So it is a big deal. At the same time, the Western world has put a huge amount of fiscal stimulus into the system, and that's driving a little more inflation and a little more nominal GDP.
What about the animal spirits, as it were? I mean, because there are a lot of reports that both individual people and corporates may be sitting on their money a little bit because they don't have the confidence. Yeah,
you've seen about a 300 basis point increase in the savings rate. China has a high savings rate to start. It's about 28% normally. It's upwards of kind of 31, 32%. So we estimate if they were able to bring that savings rate back down by increasing confidence again, that could add $200 to $300 billion of additional spending per year, which is pretty meaningful. So, but what's happened is in a post-COVID world, zero COVID, really you had some businesses that didn't do as well during that period. I think people are looking for a little more direction around the housing market, as well as around just what's the strategy for both exports and domestic business posture. And so I think the more the government can encourage that kind of visibility around where they're going to go, the better it will be for overall both domestic growth as well as global growth. Remember, China still, even in its current state, is still about 25% of global growth, which is just a massive number.
So let's turn to the question of what China can and should do. You mentioned real estate a couple of times.
Yep.
And nobody talks about China these days without talking about the real estate problem.
Yeah.
How bad is it? What do they need to do?
So what we did is we went back and looked at, excuse me, a bunch of different housing crises to see what the best path is. And you usually have two different factors. One is price and one is volume. China's had a real slowdown in volume. They probably need to have a little more in the form of price. So that will be a headwind. So what can they do? One is they can actually encourage more urbanization. They still have a ways to go with their urbanization rate, kind of 66%, get that north of 70. That'd be one thing. Second is you could grant more licenses to the migrant population, which is actually very meaningful. It's called a hoku, and you could give them permits that would allow them to take up more permanent residence. Those are easy supply side reforms. Nothing's easy, but you could do that. The third thing I would do is I would consolidate the number of developers. They have too many developers, and I would really back the strong ones, and I would do a little more of a government guarantee where one is I probably would abandon some of the weaker homes, the poorly constructed homes, and just raise those. But then I would invest and create visibility around the good homes so that the Chinese population feels strong about that. And to the government's credit, what they came out with last week was about a $50 billion stimulus to do exactly that.
What's the state of the capital markets in China right now? What do they need in order to really get their growth going again?
I think they need to get more foreign capital to come back into the region. That has really slowed down.
Well, foreign direct investment's really dropped off a cliff.
It's really fallen off dramatically. So there are a couple things you could do. One is I think you could have more domestic consumption stories around in the capital markets in the form of IPOs in the A-share market. That's their local market. The second is I do think it's not just about bringing capital in. You also have to have exits of companies so that people can access the capital markets, and probably broadening that is not a bad strategy as overall.
So talk to our investors and give them a little advice here if you could. KKR has been a player in China for a good long time.
Yeah.
You know your way around over there. Where are there opportunities right now in China? Is this a time to be looking for some places to go into China or increase your exposure?
We've been very focused on things around the domestic economy. So think about lighting, efficiency in lighting, pets, veterinarian clinics, beverages, things that are going to continue as the Chinese population enjoys the benefits of urbanization and growth, probably less so in areas such as technology. For anybody that's interested in Asia overall, I think one of the mega themes is intra-Asia trade. What's happening is since COVID, you've really seen China and its peers trading more with each other. It's becoming more like the Europe and the U.S. So in 1990, about 48% of trade in Asia was intra-Asia. Today, that number is meaningfully higher. We think it's going to be in the 70s within the next 5 to 7 years. And that is what we heard from CEOs in not only in China, but in Japan, as well as what we hear in India. So I'd really focus on the infrastructure around that: fiber, data centers, transmission lines, roads, ways that companies can benefit from that trend. And we're doing that through our infrastructure business, our private equity business, our credit business is lending to those companies to allow them to grow. That's a great way to do it. Overall, we continue to like Asia. It's about a third of our business, and we have a dominant position there, and we've really enjoyed understanding. I think you have to be able to look at relative value in Asia. Right now, China is, some people have moved out of China and India, but that does get reflected in valuation. So there's this intersection between fundamentals and between valuations, and I would just encourage your listeners to make sure that they understand both. India is a great long-term market, but it can be expensive at times. China right now has obviously had some bumps in the road, but it's actually trading at a pretty attractive valuation. Japan is probably the most interesting because it's cheap and the fundamentals around corporate reform are really improving. So those are probably some tips to consider as you think about the region.